The first area that professional traders look at when they're engaging a trade is what their risk is. They're not only looking at what their risk is on that particular trade, but what their general risk is across a whole spectrum of their trades. The retail trader will typically enter on an emotion and not have a clear sense of what the ultimate at-risk amount is for that position. That results in a number of really damaging behaviors, moving stop losses further back, adding to losing positions, feeling anger and wanting to get back at the market and entering a sequence of trades after a large losing trade, trying to win back that loss. So the first thing that you need to do when you're trading is develop a really robust risk strategy. Understand what is your amount at risk per trade, and are you keeping to what you agreed as your risk amount? If you're deviating from that plan, and that's a good indication that something's not quite right. And even the very best strategies, if they're not used with good risk management, won't work. If you're over leveraging, using too much risk in certain times, then you're just making it almost impossible for you yourself to succeed. So forget the strategy as the most important thing, ironically. Instead, look at how am I managing risk, get that robustly sorted out, and then you're in a much better place to start making progress. Until you manage that risk question, you won't be able to make any progress, pretty much regardless of what strategy you're using.